Bitcoin is digital capital. Everybody wants it. Everybody knows about it. No one can steal it from you. And what's the use case? Well, the use case is to get rich or stay rich, which is like half of everything. I remember I'm sitting at my poolside next to my friend Eric Weiss, and it's March, and the lockdowns hit, and interest rates go to zero, and and the stock market's crashing, and and all hell is breaking loose. And I say, so tell me about that Bitcoin thing again. Every day for the past 4.5 years, I get up and I say, buy Bitcoin, and then you do not sell your Bitcoin. Right? Very simple mantras. And by the way, and I don't recommend anything else. There's 100,000 other investment ideas where it might be appropriate to sell them at some point. That's why I don't talk about them. I just talk about Bitcoin, and I say, if you're going to buy it, be prepared to hold it more than 4 years. The short period is 4 years. The mid period is 10 years. The right period is forever. Buy it so you can give it to your grandchildren so your family will be rich in 250 years. That's what I would say about Bitcoin. And, Patrick, when you look at generations, when you're in your 20s, you have a lot of time on your hands, and you want respect, and you want prosperity. You want to make it in life. Mm-hmm. I need to make money so I can buy a house, have a family, buy a car, do whatever I want. And so you take your time and you invest it in making money. That's why the millennials, the Gen Zs, they get crypto, they get Bitcoin, because they have 100 hours or 200 hours or 1,000 hours. Now, when you get in your 60s or 70s, 80s, how many people, past the age of 55 spend 100 hours studying a profoundly new investment idea to figure out?
Very rarely.
It's because you've already made it. You already got a family. If you're going to have kids and a family and a house and a whatever, you've already done it. And you did it by exercising your trade because you were good at something, and you're confident, and that's your worldview, like Warren Buffett's worldview, et cetera. So I don't blame people. It's just, when you're successful at the end of your life, you know what made you successful. You don't have a need to know. When you're at the beginning of your life, you're not successful. You've got no respect. You've got no future. You better find something new, right? That's why Led Zeppelin, they picked up electric guitars and they played rock and roll, because Beethoven and Mozart had already done the other thing. Too late for that new thing, right? The new people get the new thing. And so occasionally you find a 30, 40, 50, 60-year-old who will embrace the new idea, but it's like, what is it? You have to be profoundly, intellectually curious. Larry Fink is. That's why BlackRock is going to make a fortune on this. Or you have to be desperate, frustrated, nothing to lose. I mean, the truth is, I'd characterize myself that way in 2020. It's like the stock is like $6 a share enterprise value. The company's enterprise value is $6 a share. And my choice is sell the company and retire, or take a risk and open my mind. And I remember I'm sitting at my poolside next to my friend Eric Weiss, and it's March, and the lockdowns hit, and interest rates go to zero, and and the stock market's crashing, and and all hell is breaking loose. And I say, so tell me about that Bitcoin thing again. The future is good, but at the end of the day, Bitcoin's future is just pure digital capital. And I look at it as, why don't I just keep buying something going up 29%? All I got to do is borrow the money or raise the money at a cost of capital less than 29% over 21 years. What I'm saying is, if you have a chance to buy Manhattan for 60 guilders in 1626, you should buy it. But what I would say, which is deeper, is you could buy Manhattan real estate every decade for 300 years and always pay more than the previous guy paid, and it would still be a good idea. The key to getting rich is by scarce, desirable property. Pay for it with fiat. How much is a guilder worth today? Like, pay for it with money you printed. Yeah. Borrow the money. But, we borrowed the money to pay for Alaska. The country was broke in 1867. We just fought the Civil War. But what did we do? This guy Seward had the vision to print a $7.2 million check, pay off the Russians. And so, number one thing, buy the property. Number two thing, hold it for a long time. right? I mean, because it might not feel like much, but when you're compounding over 100 years or 200 years, and so what do all those four have in common? Well, they're all something you would want to hold for more than 100 years. And so what is Bitcoin? Bitcoin is the next frontier. We've already gone as far west as we can go. Now we have to go to cyberspace. I mean, eventually we'll go to outer space, but we're waiting for upgrades in propulsion to go to Mars and the asteroids. But between now and then, you go to cyberspace, and the real point is Chinese billionaires, Russian billionaires, African billionaires, South American billionaires, every company on the planet would rather have their money in the U.S., but they can't get it to the U.S. So where else can I put it? I can put it into the city of Bitcoin. I buy Bitcoin, I sell Africa, I sell Venezuela, I sell Russia, I sell Siberia, I sell China, I buy Bitcoin. Bitcoin is digital capital. Everybody wants it. Everybody knows about it. No one can steal it from you. And what's the use case? Well, the use case is to get rich or stay rich, which is like half of everything, right? The great irony is people can't figure out what it's good for. It's like for the last 10,000 years, people have been trying to figure out how to get money and keep it. What it's good for is the wealth that allows you to power your family, your country, your company.
Apple should buy $100 billion in Bitcoin. You said, Bill Gates, call me if you want to make the next trillion, meaning buy Bitcoin.
Yeah.
And then when I saw a number that just recently came out, is that Berkshire Hathaway, if I'm not mistaken, they're sitting on $325 billion of cash. $325 billion of cash where they're sitting at.
That 320 billion, that is destroying $32 billion a year. They are destroying $3 billion a month in capital because they're generating a 3% after-tax yield at best, and the cost of capital is 15%. So take 12% negative real yield on that. That is the cost, multiply 325 billion times 12%. That's what the shareholders are paying right now for that. The second point I make is, if you look at Microsoft, for example, 98.5% of the equity value of Microsoft is based on forward expectations of quarterly earnings. And 1.5% of the value of Microsoft is based upon tangible liquid assets. And another way to say it is Microsoft is 144 times levered to their quarterly earnings. If they earn $3 billion a quarter or X billion, whatever the number is a quarter, it's more than that, I guess, but you multiply it by 144x, right? And if they miss by $1 billion, it's 144 billion where you move. And the reason why operating companies are like that is because the SEC 33 Act and the SEC 40 Act required that operating companies hold no more than 40% of their liquid assets in securities. So normally they'd use treasury bills. And treasury bills, as we just showed on that chart, are toxic. It's toxic capital. It's poison. You might as well just inject poison into your veins, right? You're bleeding 10% of your capital a year. So they don't keep the capital. And Bitcoin is a major revolution because starting in 2025, you can account for Bitcoin on fair value basis, which means that Bitcoin is just as good as treasury bills, and it's a commodity, so you can have 100% of your balance sheet in Bitcoin. And what that means is Microsoft, if they just stopped dividending out their cash flow and stopped buying back their stock, and they convert it to a Bitcoin buy, and you crank in like a conservative, like a 21% assumption, like half their cash flow in Bitcoin, you make $1 trillion over 10 years. Because Bitcoin's on a need-to-know basis, and people they have to feel like they need to understand it, like they've got a problem in order to have an open mind. And if they don't acknowledge they have a problem, they don't have an open mind, and they take a conventional view toward the world, it's like the people with a strong corporate view and a healthy company and a strong conviction of their company, they don't have an open mind to a profound paradigm shift. The geopolitical logic here is simple. It's go where all the money is going to go and buy it first. And so if you knew that everybody was going to move to Manhattan and you could buy 20% of Manhattan in 1650, it would be a good idea. But maybe more to the point, the British came to the New World and grabbed the New World, and that's what created the British Empire. So the United States runs the world's reserve currency, but Bitcoin is emerging as the world's reserve capital network. If you just want to keep your money forever, and everybody in the world loves that idea. I'd like to just keep my money forever. So the smartest thing for the U.S. to do is to buy up as much of that as they can. So you buy 1 million coin, that's 5% of the network. Buy 4 million coin, you got 20% of the network. Why not buy 20, 25, 30% of the network? If you buy the network, you can buy it for money which is effectively free. In fact, you could just sell the gold, swap it to Bitcoin, and then as Bitcoin becomes a 200, 300, $400 trillion asset, right? You're sitting on anywhere from 40 to $80 trillion gain. And so the logic of this is pretty clear. First of all the foreign capital in the world is going to be drawn into the Bitcoin network. So if the United States owns it, then that's like the same as the money coming to the US. You're just drawing capital from Russia, from China, from Africa, from South America. It's going to come to the US on the Bitcoin network if the US owns it. The second logic is all the capital from the 20th century is stampeding into the 21st century. So all the money that was invested in crappy bonds and decaying real estate and warehouses falling down and companies that are going out of business, all that money is going to go into the Bitcoin network. So you own the 21st century. And, the third idea here is, right now, a lot of people use U.S. sovereign debt as their capital asset, which, as I just pointed out, is minus 5%. Every business person knows it's not as good as the S&P index. So if people start to swap out the treasury bonds and they start to buy Bitcoin with it, then you would want to own the Bitcoin, because that way you don't have to worry about people replacing the U.S. treasury asset with a Bitcoin asset, because the U.S. owns Bitcoin too. So this defends the U.S. reserve currency status. It defends U.S. economic leadership. It attracts capital from our enemies. It attracts foreign capital, and it actually lays in place a peaceful, equitable solution to working out our differences with everybody in the world that's a business person would appreciate. And so, yeah, like if you could buy Manhattan for free with 60 guilders or some glass beads or something, and you knew that it was the best port in North America, and one day all of Europe's going to come and do business in North America, it would be the best investment going.